What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we see a strong bounce across the board as we have now hit downside price targets on nearly every index. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 2.64% and we see SPY bouncing off that price target at 358, which was our 200 simple moving average on the weekly chart, and this is going to be the bounce or die level. Remember, if we can bounce off this level and hold up above this level as support, it is possible that we are ending a bear market within a secular bull market. But if we start getting weekly closes below SPY 358, we have to start thinking about the possibility the stock market is trying to roll over and die and go into a secular bear market. So this level at SPY 358 is extremely important on weekly closes, so we will be monitoring that level very closely. And so far the bulls are doing everything they need to do by having a strong bounce from that level because we did reach that price target on Friday's close. Also notice Friday's close had extremely high volume, and if you go back and you study market bottoms, they're always going to be on very high volume, and you very rarely put in a bottom on low volume. So the good news, if you are trying to get bullish off this level, is we have been seeing an increase in volume as we came down to that price target, and so far we are seeing a positive bounce off that level. And if you look at the E-mini contracts on the S&P 500, we did get a very bullish engulfing candle on the daily chart. So this is only day one, and one day means absolutely nothing. But if we do start to see follow through from today's bounce, we will want to take out this previous daily high on SPY just above 370. Bulls will need to close the gap because bears will use that level to short from, and we need to get back over the 20 simple moving average and the critical risk level at 390, which is also going to be the 50 daily moving average. So remember, this is still a downtrend of lower highs and lower lows, and to get more bullish, we are going to need to see a higher low followed by a higher high, and that is going to be our early sign with the price action that we could be reversing the downtrend. So this is still a downtrend until it's not, which means we are expecting lower highs and lower lows until the price action proves otherwise. But if you want to blindly buy a long position, you are going to manage your risk around SPY 358, which is that weekly 200 simple moving average. If we break below that level, we could hit 350, which is still a valid downside price target while we're in this downtrend. So watch that resistance zone to the upside around 370 all the way up to about 374. And if we could break the 370s, we still have plenty of resistance in the 380s. So we are definitely not out of the woods yet just because we had one day of bouncing. On the NASDAQ 100 triple Qs, we were up 2.35%. And we did hit that price target on Friday, which was going to very likely hit by the end of the month, which was down there at 267.5. And we have now officially reached that price target. So the question from here is, are we going to the next price target at 258? Or did we satisfy enough downside and we're getting ready to see a strong bounce? Well, the first day we didn't see any follow through with the candle close because we barely closed above the 5 EMA. So we need to get back over that resistance at 280 and fully close the gap just below 284. If the bulls can get back over 284 and break the critical risk level around 293, then we can start getting a lot more bullish that the downtrend could possibly be ending. But we're not going to assume that's going to happen. We need the price action to prove it. So on a breakdown below 267.5, we have the next valid price target at 258. And if we can start breaking back over 280, we can start getting a lot more bullish because that will take out the previous daily high. So respect the fact that we're still in downtrends and know these critical risk levels because we could very likely be seeing a strong bounce and this was only day one. Or this could just be another dead cat bounce before more downside. So remember, I always say know both scenarios and plan your risk around these risk levels. So right now in the triple Qs, since we are seeing a bounce, you can be long using this risk level right around 267. In the Dow Jones, we are up 2.61%, and the Dow Jones was all the way down here right around 287 on Friday's close, which was just $2 higher than the full weekly gap close at 285. So it begs the question of whether or not we're going to fill that gap now, or are we going to fill some of these gaps to the upside and fill that gap to the downside at a later date? Remember, we have gaps above and below, but on weekly charts, we know there are very few gaps, so it is very likely at some point the Dow Jones is going down there to 285, so just keep that in mind. Now, if we fill the gap and continue lower, the next price target is 276, and while we're above 293, it is likely that we're trending up towards resistance around 299 and the gap close at 300, and above that, we have resistance at 305.8 and the critical risk level at 312. On the Russell 2000 IWM ETF, we were up 2.65%, and as you can tell, the Russell 2000 is seeing relative strength because this is the only index that has not yet taken out the June lows, and so far we are seeing strong support around that zone at 163.75. If that level fails to hold as support, the next leg lower will be 159.5, and the upside resistance levels are going to be right around 170 all the way up to about 174.7, and the critical risk level at 178. On the ARKK ETF, we are up 0.45%, and ARKK continues to hold this support trend line, which is a rising slope, and that support is currently at 37.5. As you can tell, ARKK has not taken out the June lows, so we are seeing relative strength in the small cap names because we've also seen this condition in the IWM. Now, if we do break down the June low at 36.5, we do have the next leg lower down here at 33.7, but so far this level of support is holding up. Upside resistance will be $40, $41, and $43. And we are in a bear market as long as we're below 47. So there is a long ways away to go to the upside before we break out of this bear market. On the VIX, we were down 4.81% today as we see the VIX getting crushed all the way back down to 30. But the VIX continues to close above 30, which is still a very volatile market. Remember, volatility does work in both directions because the bulls can use the VIX to crush down, which will give more fuel to move to the upside. So if we see the VIX starting to crush down below 30, that could give favor towards a short-term bull trend. However, as long as the VIX is above 24, it's still going to remain a volatile bear market, so keep that in mind. And as the VIX starts spiking off of 30 of support, get ready for a lot more volatility, which could favor that next leg lower and possibly even a spike in capitulation. On Bitcoin, we're currently up 2.66% as Bitcoin just refuses to break and close down below this support, which means we have not yet seen the next leg lower down to 17,000. And we still haven't taken out the June lows. So Bitcoin is showing a lot of relative strength around this critical support, but we still haven't broken above the critical resistance trend line just above 21,000 and the critical resistance daily high just above 22,000. So you can continue to accumulate, but as you can tell, this wedge is going to see a breakout in the very near future. And if we break down to the downside, we're looking for 17,000. And if we break out to the upside, we're looking for 22,000. On Amazon, we are up 2.5% today as Amazon is still holding around this support zone between 113 and 115. And this level has to fail to get to the next leg lower at 106. A bounce from here could take us all the way back up to fill the gap right around 126, but we will have resistance on the way there right around 119 to about 122. On Microsoft stock, we're up 3.37%, but Microsoft is still failing to close above the resistance at 242, and we could still have a possible next leg lower down to about 231. Above 242, that'll be a bullish breakout, which could take us all the way back up to about 252. So keep that in mind. Above 242, you can start to get more bullish that Microsoft is getting ready to go higher. On Nvidia stock, we're up 3.07% as Nvidia is starting to bounce off of the support zone right around 122, which could take it all the way back up to fill the gap around 142, even though we will have resistance right around 128 and 135. If we break down below 122, it's instantly risk off because it's no man's land if we continue to go lower. But at this point, I do believe Nvidia is getting ready to see a counter trend rally, which should at least take us back up to test that 50 daily moving average. On Tesla stock, we were down 8.61% as Tesla did confirm that double top with September 29th's close below the neckline, which could take Tesla all the way down to 231. We filled the gap to the downside and we're now extremely oversold below the lower Bollinger Band, and we now have a gap to fill to the upside at 262.47. So with the gap filled around 250 and the valid price target at 231, it is very possible we get a dead cat bounce to fill the gap and still go reach the double top price target. So keep that in mind that this is a very oversold dead cat, and even if it's bouncing in the short term to fill the gap, we still have a lot more downside to go before we meet the price target. Upside resistance levels will be right around 251, 258, and that gap fill at 262.47. On Apple stock, we were up 3.08% as Apple was also getting very oversold below the lower Bollinger Band, and I think you're going to see something very similar in Tesla stock very soon, because just like Apple getting oversold, it didn't last for long and we're right back inside the Bollinger Bands. So Apple did bounce from that oversold condition near that support around 136, and right now we're back above the resistance just above 141. To continue higher, we need to start trending up towards 147, but this is still going to be a downtrend as long as we're below 140. 150. The next downside price target if we continue lower will be 136 and then 133. On the financial sector, we were up 2.7% as the financials is bouncing off of this support right around 30.4, and we still have a gap to fill right around 31.5. The industrial sector was up 3.02% today, bouncing off of the top of the gap and very close to fully closing the gap to the upside at 86, but we are still below the resistance at 85.5. The healthcare sector was up 2.06% today, bouncing off of the support right around 121, but still below the resistance at 125. We're still on a downtrend and there's still the possibility to come all the way back down to the June lows at 120. The energy sector was up 5.65% today, bouncing off the gap fill to the downside and coming all the way back up to the 50 daily moving average, and I do believe we will find resistance here. We now have a gap to fill to the downside, so if we do get rejected from 77, look for the gap fill to the downside at 73. So jumping back over to the S&P 500, without a doubt today was a very strong bounce from the price target, which is that 200 weekly simple moving average, but we cannot say that we're out of the downtrend until price action proves it. So continue to manage your risk around these critical risk levels and make sure you understand volatility does work in both directions. So understand both scenarios and have a trade plan so you can act accordingly. Remember, it's always about risk management, patience, and discipline, and that is the only way you're going to become a profitable trader. Also, don't forget I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. If you want to learn more about Bank or want to subscribe, you can click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Trading Discord community by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.